Good morning, my 111 students. So this video is on lesson 9, week 9. So this is all about your closing entries and other matters such as your post-closing trial balance. So closing entries. Income and expenses are temporary accounts that facilitate the preparation of the income statement for a given period. So closing entries are actually prepared at the end of the accounting period, let's say December 31, end of the year. So when you are done preparing the income statement at the end of each year, all accounts that appear in the income statement are closed, and the difference between revenue and expense, which represent the net profit or the net loss, is transferred to the capital account. So in other words, the capital may increase or decrease depending on the result of the performance of the entity. So this process is actually the closing procedure, which is the step 7 in the accounting cycle. There is a need to prepare the closing entries so that those temporary accounts will be closed at the end of the period. Another temporary account that is close to capital is the drawings or withdrawals made by the owner. This account always decrease the capital account. So how do you close the temporary or nominal accounts? So we still use Charisma Beauty Parlor, which is connected with our previous video. So in Charisma Beauty Parlor, to close all the nominal accounts with credit balance, so on those income statement accounts, there's only one nominal account that is in the credit side, so the service income. So to close the service income, to make it zero, since it has a credit balance, so it shall be debited, so that credit minus debit is equal to 0. So debit service income 1,190,300 and credit the income summary 1,190,300. So income summary is another temporary or nominal account which only appears during closing entries, and then later on it shall be close to 0 also depending on its balance, whether credit or debit, and it is close to capital. The step 2 for closing entries is to close the the income statement accounts with debit balance, and these are the expenses. So all expenses have debit balance in the normal side, so this shall be credited to be closed because debit minus credit is equal to 0. So that you can notice that after posting the closing entries in the general ledger, all income account titles and all um, expenses account titles shall have 0 balances. So to close the expenses accounts, you have to credit them. So credit salaries expense 560,000, credit rental expense 72,000, transportation expense 22,000, interest expense 118,000, other expenses 70,340, insurance expense 4,000, supplies expense 66,650, depreciation expense 25,000, and then get the total of these amounts, then debit the income summary 937,990. So the next is to close the income summary. So income summary a while ago has a credit of 1,190,300. So 1,190,300 minus 937,990, income summary has a credit balance of 252,310. So to close income summary is to debit income summary and then credit Charisma Capital. So please take note that the 250,310 is net income because total income is higher than total expenses. So therefore, it increases Charisma Capital. If expenses were higher than income, so that is actually represented by a net loss. So in that case, the income summary will have a debit balance. So to close an income summary that represents net loss is to credit income summary and then debit the charisma capital. So because net loss decreases charisma capital. So in this case, in our beauty parlor, Charisma Beauty Parlor, that was a net income. So to close income summary with a net income, debit income summary, and credit Charisma capital. And then to close the drawing account, so drawing account always decreases capital. So to close it, debit Charisma capital and credit Charisma withdrawals. Because our withdrawals has a debit balance, so to make it zero, credit the Charisma withdrawals. Then, the closing entries are also to be placed or recorded in the general journal and then post it to the respective general ledger. So after posting the closing entries, all nominal accounts will have zero balances. So what is left to have balances will be the real or permanent accounts, which are the assets, liabilities, and capital. So, after the closing entry is the preparation of the post-closing trial balance. This accounting step actually have to prove the equality of the debit and credit, which is very important so that we will really know that the trial balance of the next accounting period is in balance. So, this trial balance now, because this is after the closing entry, so that means this only contains the real or permanent accounts, such as assets, liabilities, and the ending capital balance. So we have to prepare the post-closing trial balance in order to prove the equality of debits and credits, to ensuring that the amounts forwarded to the next accounting period are accurate, and also for easy transfer and traceability of the accounts. Reversing entries actually was discussed on last video for your week 6 to 7. So to review, the reversing entry is actually the reverse or exact opposite of the related adjusting entry, but not all adjusting entries are reversed. So only the adjusting entries that increases an asset or increases a liability are to be reversed. And reversing entry is prepared at the beginning of the accounting period. So this actually represents the first entry appearing in the general journal. So, to review what adjusting entries are subject to reversing entries, first, all accruals, both the accrued income and accrued expenses, are to be reversed. So, for illustrating, the amounts here are assumed. So, for example, adjusting entry on December 31, 2019 for accrued expense is debit salaries expense and credit salaries payable. So, at the beginning of next year, in order to reverse it, debit salaries payable and credit salaries expense. And for accrued rent income, debit 15,000, the adjusting entry, and then credit rent income. So the next accounting period, the reversing entry is debit rent income and credit accrued rent income. So please take note, the two entries, the two adjusting entries increases. The first one increases liability and the second one increases an asset. So therefore, they are reversed. Next is the deferrals of income. If the adjusting journal entry recognizes liability, it needs to be reversed. So for example, if the adjusting entry was debit service income, credit unearned service income, so this increases a liability, therefore, it shall be reversed as debit unearned service income, 10,000, credit service income. So this adjusting entry here, the original entry was actually the income method. So therefore, in case of deferrals of income, when the original entry is by the income method, so the adjusting entry is reversed. When it is a liability method in the original entry, therefore there is no reversing entry for the adjusting entry. Then, in the deferral of expense, if the original entry uses the expense method, so the adjusting entry will be prepaid insurance, credit, insurance expense. And then, So this needs to be adjusted, the reversed, because the adjusting entry increases the asset, which is the prepaid insurance. So to reverse, debit insurance expense 5,000 and credit prepaid insurance. However, if the original entry was an asset method, so the adjusting entry for that has no reversing entry. Just always remember that in reversing entry, if the adjusting entry increases an asset or increases a liability, do the reversing entry. But if not, no reversing entry. So to prepare the post-closing trial balance of Charisma Beauty Parlor, we have the heading, of course, the three-line heading, the name of the company, the name of the report, and then the date of the report. And then, so account titles, enumerate the account titles: cash, accounts receivable, prepaid insurance, parlor supplies, equipment, accumulated depreciation, unearned revenue, accounts payable, loans payable, interest payable, salaries payable, and Fortalejo capital. Then, their balances are to be written in the debit if debit balance, credit if credit balance. So, this is the look or picture of the post-closing trial balance. Posted their balances in their correct balances, debit or credit. Then, total the debits and total the credits. So, there's something wrong with this. Can you add? And then you tell me why I have written this not equal. So, this should be equal here. So, wait. Faith! Okay, so let me add. Katulugon na si Ma'am Ani ba nagbuhat? So 186,960 plus 65,000 plus 8,000 plus 8,350 plus 580,000. So 848,310 is correct. Total debits. For the total credits, we have 75,000 plus 40,000 plus 13,000 plus 250,000, and then plus interest payable of 8,000 plus salaries payable of 10,000 plus F capital of 252, 310, 648, 310. Why is it not equal? Where did I go wrong with my account titles? There is a missing of 200,000. What is it? What have I not included? Accumulated, unearned revenue, accounts payable, loans payable, interest payable, salaries payable. No, so this is what makes this wrong actually, class, is because Fortalejo capital should be 452,310. This amount should be here and then total. Okay, so that's it. Sorry. So this 452,310 should be in the F capital. This one should not be here. Then total it, you will get 848,310. So that's it. Katulugon na si ma'am nagbuhat sa PowerPoint. Okay? So, thank you and goodbye everyone.